Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep going with our analysis of the gold market. So as usual, prepared report. Here we have actually new conclusion. If in the previous 2 years in our conclusion we mostly keep our view on the bullish long-term trend for the gold, currently and at this point we have adjusted a bit this position, not because we think that it will be reversal, but we think that market has reached some epic moment and a target where it needs to take the pause. Actually, it follows from current political situation. As you understand, in the gold market currently are two major driving factors. First of all, are the problems in the United States economy, which stands intact. Second is geopolitical tensions. So when we have made the prediction two years ago when the gold market was 1650 and we called to buy it, and since then it has increased 2 times in price, we're not really too smart to overcome the markets. And investors were just trying to not follow the common opinion, which is a bit has some lagging, some momentum. If you take a look at the recent headlines and comments from the traders, you could see that they are following mostly the same narrative that has been formed through this recent year. Uncertainty of the tariffs, geopolitical tensions, budget deficit, and so on. And they still keep repeating it. But currently, we're just not trying to follow the common opinion. We're not smart enough to really predict some big steps on the politicians and big figures, but at least we could analyze the changing situation as soon as possible. And as you can see, currently the second component of the gold rally, which is geopolitical tension, has to be repriced. And this repricing should be to the downside, because it is becoming clear that the tensions, war tensions, as in the Middle East and in Ukraine, start getting relief. And we think that currently on the first stage, gradually is moving to China, which will become the next determining factor for the gold performance in the nearest few years. So all this stuff we have explained and in the conclusion part and in general through the report. You could find also lots of other things interesting, for example, concerning repricing of the United States gold reserves, some other things. I have tried to actually stay aside from the boring political discussion, so I brought some couple of moments to explain overall situation. But the fact is the geopolitical situation is changing, and this tension in this subject will diminish, which is definitely suggest retracement on the gold market. And actually, even without any this kind of information, political news, you could see it by the technical reasons. We already mentioned last week, market hits yearly pivot resistance run, market hits all-time OP, which means that the gold price historically has increased 2 times. Third, market is overextended on the monthly chart on standard overbought. If you take together 2 plus 2, you get the same conclusion. Retracement currently is unavoidable. So, and actually you could see the same starting of this process on the daily chart as well. So what we have, you could see that on Friday we've got reversal bar, bearish reversal session. In fact, our Thursday, Friday trading stuff has worked perfect. So market was finished our prediction precisely around the top. So we said if you take long position, get out at the top, because market stands at overbought. And the really big problems for the gold to form another top. You could suggest forming of another top only in one situation, if you have uncompleted nearest standing important extensions. So for instance, if we would have some important OP slightly above the top and market was at overbought, you could suggest that market has to reach it. But at the current point, all major targets already has been met. So currently you can see the drop and market has formed a reversal session. So on Friday, we've got first close below the 3x3. We do not have here any bullish grabbers. If you take a look at the futures chart, you could see that gold has closed below the MA city. So we do not have the grabber here. So our next stage of the trading here is obviously related to two components. First component is a big butterfly. It's 1618 butterfly that is finalizing the historical OP. It finalizing the local weekly OP around 29 even, if you remember about this. And also finalizing reaching of the yearly pivot resistance one. So all the stuff is finalizing by the potentially bearish reversal pattern, which is a butterfly. Second component of our trading here is a great thrust to the upside, which is potentially the source of the either double repo pattern on the top, which I would say would be more reasonable here in the current circumstances, or bread and butter trade. Whatever pattern will be formed, the at least retracement has to be to the 28 area. For the butterfly, this is even not the 30%. I have taken a bit softer conditions. I already talked about this. So for the target of the butterfly, you have to use the fib levels from the A points, which will be somewhere around 2750, 30%. Here as I am using just softer conditions. Well, the reason is actually that the daily average sold currently stands in 28. So that's why I use this level. And the second is actually the thrusting 30% retracement from the thrust. And actually potential points where a brand body trade could start. If it will be double repo, retracement might be even lower to the 50% support, which is at 2750, and corresponds to the strict target of the butterfly. So that's the input for our strategy for the nearest few weeks probably. Now the big question is how to take the position and where to take position. So we know the direction. For us now, the technical question is how to take the position. What the major risk? The major risk, guys, with the double repo pattern, because double repo suggests at least more volatility around the top. Momentum stands great here. So it might be some whipsaw action on intraday charts, which makes it really nightmare to take the position, the process of the taking position. And double repo suggests another possible come back to the top. That's the major risk. If we wouldn't have it, I would say that, well, let's take a look on intraday charts and take a position, some retracement with downside continuation. Currently, the situation might be not as dangerous because we've got the reversal bar that suggests some downside continuation. Maybe it will be not as strong, but it could happen. Double repo pattern will not be broken if market will move slightly lower. The major condition for the double repo, as you know, market should not reach the 30% support, but it could flirt around current level in 28 freely, and double repo still will be on the table. So that's what we have on the daily. On the 4-hour time frame chart, you can see that market dropped back to the confluence that actually we were buying last week, and this drop was really fast. It's great acceleration down. This is another reason why I think that theoretically it could try to drop slightly lower before and if double repo will start forming. On the hourly chart, we have potential double top pattern. So taking it all together, dealing with a double top, we have two options for entering. Either to wait for a minor bounce and take position on some retracement, preparing for downside breakout, or potentially you could use stop sell order somewhere around 28.66, few cents above those lows. Using stop sell, once market starts broken this level, you're stepping in. Your stop will be filled and you're taking the short, making the bet right on the breakout moment. This is common classical two ways of the trading and taking the position on a double top pattern. So this is a bit aggressive approach because we do not know what will happen with the double repo, how it will be formed, what the shape price will be, and so on. More conservative approach suggests that you are not dealing with the current double top and just waiting for a better shape. So you need to estimate what the particular shape will be. This is especially important for daily traders. So if you trade on a daily chart, you are not dealing with the intraday charts. You do not need to do anything just because you do not have any patterns in place. You could try to deal directly with the butterfly, for instance, so taking short position, placing stop above this, and just waiting for the target. This is also possible if you would like to trade the butterfly. But if you're watching for some Jordan Napoli pattern, you do not need to do anything because you do not have any Napoli pattern in place. So you just need to wait when it will be formed. If market directly drop here, this will be bread and butter buy. If you will get double repo, you will take position once it will be confirmed, and in this case the price will be probably somewhere in the same area. So that's two things that we have currently. So since market just has reached these important targets and just showed the first reaction to the downside, we do not have lots of information yet. So I think that let's see how the week will open and we see what will happen. Maybe we'll get a bit more clarity, and on our updates we prepare a more detailed plan for dealing with the current situation.